Hey guys, Bill Soriano here from Pittsburgh, and it's Sunday, 2/26, so it's time for the weekly SmartMonics outlook for next week, starting, of course, the market opens tonight, 5 p.m. Eastern time, but we call it Monday, 2/27/23. So short month here, February, just 28 days. So that means what? Wednesday's already March 1st. How about that, guys? So we're almost a quarter of the way through 2023, and if you haven't joined us yet and started learning how to trade this SmartMonics Forex strategy that takes you less than 30 days to learn, has over 85% win rate. Over 85%. You can make money trading Forex if you only win actually 35 to 40% of your trades, right? There are ways to make money. If you have a 1-to-3 risk to reward ratio, meaning that you make 3%, when on your winning trades and you lose 1 on your losing trades, you can actually just win one out of 4 trades. That's 25% and actually make money, right? So, you'd actually break even. Yeah, you can win 1 out of 4 trades and break even, right? At a 1-to-3 risk to reward ratio. So that's a 25% win rate breaking even with SmartMonics. With this SmartMonics strategy that I'm about to show you today, I'm going to show you how we mark up the charts. This is the weekly outlook. I'm going to show you how we identify the 1 hour or the 4-hour order block. That's the area. That's the logical area that we expect price to come back to and react the way that we want it to go, right? Once it moves into that area, then we look for our confirmations, our ATH confirmation, which is our community's proprietary indicator, and our shift candle confirmation on the harmonic scanner. But the first part of the strategy is getting the harmonic scan on the 1-hour chart. So what I'm going to do today is what I'm going to do every Sunday, basically, is I'm going to go through the first, 5 or 6, maybe 7 scans that came out on the 1-hour time frame. So we like to look at the 1-hour scans because that's the scans that Manny, the educator in IM Academy that teaches this SmartMonics strategy, that's kind of the scans that he shows. So he marks up the charts on those scans for you. So until you learn how to mark up the chart yourself, you can actually just use his areas that he has marked up. So the first pair here is EUR-AUD, and this is a shark. So I like to bring this up, and you have to make sure these are 1-hour scans, and sometimes the price, the time frame changes over here. So you have to make sure you are on the 1-hour chart. We can see the scan here. We can see the areas Aunt Manny has marked up, but what we want to see is this is a shark pattern. So a shark pattern could be one of 2. It could be either a retracement or an extension. This one is an extension. And all that means is that this point D here is extended higher than point X. So the point here, the point X to A gives you the trend. Okay, so that's the good thing about using the harmonic scanner, because 9 times out of 10, when you're trading these pairs the way that the scanner is telling you to trade them, you're going with the higher time frame trend most of the time. There could be some situations where you're not, but 9 times out of 10, you're going with the higher time frame trend. And this is what's called the 1, 2, 3 retracement to that order block area. Now, in this case, this is an extension pattern. So there are 3 different kinds of patterns, harmonic patterns. There are retracement patterns, extension patterns, and then there's actually a dynamic pattern, which is the shark. So essentially, there's 2 types of patterns: retracement and extension. The butterfly and the crab are extension patterns. The Gartley and the bat are retracement patterns, and then the shark could be either one, right? So it could be either a retracement or it can end up being an extension. So the only difference here is this is an extension pattern. So the scan's on a 1-hour chart. So that just means when we go to mark up our area, our order block area, we're going to go up 1 time frame to the 4-hour. Okay. So if it's a retracement pattern, like the Gartley's down here, you'll see, or the bat down here that we'll go over, we're just going to stay on the 1 hour chart to identify our order block, right? Or our banker candle or our area of interest, whatever you want to call it, a liquidity block. But in this case, since it is an extension pattern, we're gonna go up one time frame, right? So this is EUR AUD. So let me just show you this real fast here, because I do have these Forex here. I do have these marked up already on my chart, so I got to bring up new charts here for you. And let's see here, we have an area marked up here for some reason, so let's remove it. So anyway, like I said, we're going to go up to the 4 hour time frame to identify our order block, and our order block is going to be up above here. So this is going to be a short setup or a sell setup. So we're just going to kind of scroll back here, and we see that we have this order block right here that price may already be into, right? And so, we're gonna use this order block. It looks like it may have already been mitigated by this wick here, but it's also coming back up to it. So we're going to maybe we'll go a little bit higher. So let's look at this one first here. So what I like to do is I like to identify the banker candle, and that's the last up candle before this big move down. This is where the banks and institutions are putting their orders in order to take this market down. Okay. So what we like to do is we like to draw a channel here around this banker candle from wick to wick, right? Because that gives us a 50% midpoint. And then what I like to do is I like to use the beginning of this channel here to put my alert. So we're going to put an alert right there on the beginning of this channel. Right. And as we're going through here, we may run out of alerts because TradingView only gives you so many, and I already have my regular charts marked up here. So if we use this area, we see that price did pop into this area and then it reacted, right? You can see we get about a 260 pip reaction off of that area there. So what this means is, it may not give us the same type of reaction because it already did come into this area. So was some liquidity removed from this area, but it didn't get to the midpoint line here. And so that midpoint line is kind of what I use. And so, once it gets to that midpoint line and makes reaction, then I wouldn't look to take any more trades off of this zone. But, you could have gotten a confirmation to take a trade when it did this back on February 6th. But right now, as you can see here, prices moved back into the area and it's kind of gotten to that midpoint of this zone. Okay, so now what we're going to do is, let me just add this here while I'm doing this here to the Outlook watch list here so we have it saved. And so we put the alert there. Price, we don't really need the alert actually because price is already in the area, right? So we're just going to remove that alert. And so as we drop down here, we're going to drop down to the 15-minute and we're going to look for an ATH. So it don't look like we have an ATH here. So let me just see something here real fast. One second. Okay, so now we got our ATHs here on the chart. I didn't have the indicator loaded. And so you can see here, there were several ATH indicators that came out here. And so, obviously we could check, we can go in here and we can check on our harmonic scanner to see if these were shift candles as well, because we need to get a shift candle confirmation as well as an ATH confirmation before we would take this trade. So, I go over that during the week in my group, the Forex Smart Money Trading Academy group. So as these alerts get hit here during the week, and we decide whether or not we get a confirmation to take the trade. I show you why I took the trade, and I also show you where the fair value gap entry is. That's the FVG entry. And I also mark these trades up, and then I put them in the group, right? So whether I take the trade or not, I put it in the group, and it counts as a trade for the week. So if it wins or loses, or it doesn't go off, whatever it is, well, if it doesn't go off, it won't be in the group. But that's what I do. So this is how we mark up EUR AUD. So now what we would do is we would come into the harmonic scanner here, and we're already there. Of course, we drop down to the 15-minute. We make this a little bit bigger here. And then we can actually see if we did indeed get a shift candle telling us to take this trade. So you can see here, we do have one down arrow right here, which with the red candle. So that's a possible shift candle. We have to open up all of our indicators to see if it is or not. And as we can see here, our oscillator is red. So the shift candle is red, the arrow is red. So everything below needs to be red. So the shift candle is red. The red candle is above the blue on our stotch. That's good. And the red candle is above the blue down here in our other indicator. And so that is good. And also with the black bar above both of them, that's even better. But that doesn't have to be there. If the black bar is down below, that just tells you that it may be trending. It may be consolidating before it makes its move. And that's basically what it did anyway. And the reason why it did that is because this was late in the day on Friday. So obviously volume in the market dries up after about 11 a.m., 12 p.m. Eastern time on Friday. And that's why that you don't see any kind of big movements. You see mostly consolidations. And that's why we wouldn't take this trade on Friday, even if we were looking at it. So what we're going to do is we would have to wait now till tonight when the market opens tonight. And I would basically wait for another confirmation. Okay. Now, because I did get this first confirmation, right? Okay. So let's make sure that we have the right time of day here, by the way. So we have to always make sure we change the time frame down here on the scanner, because every time you change it to a different chart, it reverts back to whatever that default is for you. So I need to make sure that this is New York time. So that when I look here, I could see that this indicator, this candle painted at 11:30 on Friday. So when I come back here, I can see that right here, I get a shift candle on the same exact candle. So this shift candle is a candle. It breaks this structure here, right? So that's good. And so that was the shift candle and the ATH right there. And so normally what I would do is I would mark this up, right? I would say, this is what I do during the week. I would say, took me to the wrong place there. Grab this again. I would say shift ATH, meaning it's the same candle, right? 15-minute. And then a lot of times I'll put the time of day. And that was 11:30 a.m., right? So we don't usually do all this on the weekly outlook, because we come to this pair, we're going to actually do it. So shift ATH 15-minute, 11:30 a.m. Friday. Okay. And with that being said, we go to the candle before to find our fair value gap. And I always put that in red. So we go to that wick of the candle before. That's where the imbalance is at, or the IPA, the imperfect price action. Again, all this is, I go over this during the week as well. But that's basically where our entry would be at. And you can see the price does pull back, hit our entry point, and then it comes back in the drawdown here. Okay. But again, we would not have taken this trade at this point because it's on Friday. Okay, but I'm going to mark it up here. And then what we're looking for tonight when the market opens at 5 p.m. Eastern time is we're going to look for another confirmation, another shift candle on the scanner and another ATH here, right? And so now, since we did get a confirmation already on the 15-minute, we can drop down to the 5 to look for that second confirmation to get in this trade. And that's only one of two situations where I actually go down to the 5-minute chart. I don't like to go lower than the 15-minute chart because there's just, you get too many confirmations, you get too many more confirmations, and some of them are just not accurate. So the higher the time frame you're on, the more accurate these confirmations are. So the lowest I like to go is the 15-minute. Now, if I get a 15-minute confirmation, and maybe it's on Friday, right, like this one was, then when the market reopens the next week, I'll look for a second confirmation, but I will go down to the 5-minute to try to get one earlier because I already got my first one here on the 15th. The second thing I'll do is if this shift candle here did not create an imbalance and I don't have a fair value gap entry, then we can also drop down to the 5-minute to see if there's a confirmation, a shift candle in ATH there. And if it does create an imbalance, that gives us this FBG entry, okay? And if so, we can mark that up, come back to the 15-minute, and we could put our limit order there, okay? The reason why we use these FBG entries, guys, is because they give you a better entry, okay? So you're risking less pips, right? You're always going to risk the same amount of money because you're either risking 1% or 2% of your account. But if you risk less pips, then you can get an easier 1 to 3 risk to reward ratio gain. So if you only have to risk 20 pips on a trade, when you're up 60 pips, which is quite easy to do on these trades, these SmartMonics trades, you're at a 1 to 3 risk to reward ratio. You can exit the trade. You made 6% on your account if you risk 2% of your account on that trade, right? Because it's a 1 to 3 risk to reward ratio. You're risking 20 pips to get 60, okay? Now, if you don't use the FBG entry, you might have to risk 30, 35 pips, right? And so now you have to get to 90 or 100 pips to get that same 1 to 3 risk to reward ratio trade. So you might have to lower your risk to reward to 1 to 2. So when you hit that 1 to 2, you're only getting a 4% gain on your account instead of 6. So this is the reason we use the FBG entry, because we know that they need to fill that imbalance, right? They need to fill that. Each candle needs to be covered completely on each side eventually, okay? So they will need to fill that imbalance. Now, just so you know, when I take these trades during the week, right, I will not look for that FBG entry. I just mark them up, taking the open of the next candle. So if this was actual trade during the week, I would say, okay, we're getting in this trade right here at the open of that next candle, right? Our stop loss is going to go up here, and this is probably going to go for a 1 to 2 risk to reward, right? I would just put that as our entry, the open of the next candle. But I would put the FBG line on here for you, right? And I would tell you if it gets hit. In this case, it does get hit because we want to track, we want to see what percentage of trades this gets hit and what percentage it just takes off and doesn't go back to there, right? Because that's important to know. So that's what we're tracking right now. But I will mark up the trade at the open of the next candle so that it is an active trade that we're counting, right? And I'll try to put a before and after image in the group. I can't always get the before because I may be at work or I may be asleep when it goes off. But this is how we mark them up during the week. Now, again, I don't usually go into all of this on the weekly outlook, guys. I just mark up the area that we're going to mark up and wait for price to come into, okay? During the week, I go over this. So you want to make sure if you're watching this, you're interested in trading Forex and you're new to this, you want to make sure you join my group, the Forex Smart Money Trading Academy group. Send me a message below and I'll give you the link to that so you can join, because that's where I go during the week when these alerts go off, and I want to mark up the chart, show you where to get in, where to get out, where the FBG is, okay? So keep that in mind. Make sure you belong to the group. So let's get back to the weekly outlook here, and let's go to the next pair, which is EURNZD. This is also a shark pattern. Again, let's make sure we're on the 1 hour. This is a retracement pattern, just meaning that this X point is higher than this D point, right? The X to A is the trend, the higher time frame trend going down. The ABC is a retracement. And so now you can see Manny has this area here marked up, right? Up above here. So we can just use the 1 hour chart for this pair. Okay, so this is EURNZD. Okay, and so we want to look above here. We want to stay on the 1 hour time frame. And right here, we could see that we have this order block right here, this banker candle right here. And it looks like price has just wicked into this area. So again, we're going to mark up this banker candle. This is the last up candle before the down move. You can see how price consolidated here. The institutions and banks were putting their large order in to take this price down. And we can see the break of structure here. That's very important that you do get this break of structure when you're identifying your order blocks. So you get the break of structure there. That validates this area right here as an order block, okay? Now you can see here, we do have this larger banker candle here, but the bigger move occurs with this being the last up candle before the down move, okay? So what we're gonna do is we're gonna use our channel tool here, and we're gonna mark up this area right here. This channel tool is a little annoying at times, guys. But there's our area right there. Okay, price already moved into our area, so we don't need to put an alert there. We would just, put a purple flag on this pair so that we see that it is already in our area of interest, so that we would know when we're looking at our pairs every night that we have to check these ones. So again, we could drop down to the 15-minute time frame. We did have a couple ATHs here come out, but as you can see, they're well outside of our area of interest. Okay, so again, there's nothing wrong with taking these trades if they're outside of your area. That will happen whenever price just kind of wicks into the area and comes right back out. But the problem is your risk to reward ratio is going to be lower on these trades. Because if you're going to use the wick here, the high wick for your stop loss, you can't do that anymore in this instance because price may come back into this area because it hasn't hit this midpoint yet, okay? Once it hits this midpoint, that's why I put this line here, then I'm less worried about it coming back into the area, okay? But until it hits this endpoint, in this line here, I am worried about it. So let's just say, we're not going to check, but let's just say that this was a shift candle on our harmonic scanner, right? And it's an ATH here, right? So let's just say that's it. And let's just say that our fair value gap is the candle before. Now, this isn't an active trade. I'm just showing you in this scenario. In this scenario here, well, first of all, let me just use the open of the next candle because that's how I do it, right? So we would get in this trade right here. Now, the issue here is, since it's outside of our area, we would normally want to put our stop loss just above this wick high right here. You have to put a little gap there. You have to leave a little bit of room because you have to take into account the spread, right? So if price moves up close to here, if the spread opens up, that could make this price move up and stop us out at a loss. So normally that's where we would put our stop loss, right? And so we just get rid of this line here, and then we would try to get, if we're shooting for a 1 to 2, which is what this is going to be, because that's already about 67 pips. See, we're risking about 33 pips to get 66. Okay. So again, when you're only risking 20 pips or 25 pips, you can try to get this to a 1 to 3. But once you start risking 30 pips or more, it's better to just try to get a 1 to 2. Okay. In my opinion, other people might not do that. The problem here is, guys, because this hasn't hit the midpoint of this range yet, we're going to actually have to move our stop loss up to just above this range. So now we're actually risking 46 pips. Okay. So now in order to make this a 1 to 2, we have to get about 92 pips now to make this a 1 to 2 trade. So again, we're always going to risk the same amount of money. It's either 1% or 2% of our trading account, never any more than that. Okay. But the pips are going to be different. Since the pips are different, you'll have to adjust your lot size. We show you how to do that in the group. We have a whole spreadsheet that you can use to calculate that lot size. Okay. So you calculate your lot size based on the number of pips that you're risking, right? So if you're only risking 20 pips, your lot size will be bigger than if you're risking 40 pips, right? If you're risking 40 pips, your lot size will only be half of what that 20 lot size would be, okay? Because you're always risking the same amount of money, either 1 or 2% of your trading account, never any more. Never any more until you get very good. If you're advanced, you have a very high win rate, then you can start to risk maybe 3% at the most. If you're trading in a funded account, you're only going to be able to trade, you're only going to be able to risk 1% because that's all they allow, most of them anyway. So this is how this would look here. But again, this is not a trade. Okay, so we're going to get rid of that. We're going to move on to the next pair here. Okay, probably now in this situation, okay, this is different from EA, where price already moved into our midpoint of our order block here, right? It's different than this because price just wicked in there and it's outside of our order block. So what I'm going to wait for now is I wouldn't want to take this trade on Friday. And on this one, I'm going to wait for price to actually come back into this order block because I think it's actually going to come back in here and get to this midpoint. So in this case, I would put an alert right there so that I would get an alert when that price moves in there. I get an email alert, and then those are the alerts that I use during the week to come live and show you what we would do now since price has moved into our area of interest. Okay. But like I said, in EA, since this already came well into our area, it got to our midpoint, we got our confirmations, right? We're able to actually go ahead and take this trade when the market opens if we get another confirmation. But like I said, since we got our confirmations on the 15-minute, we can now drop down to the 5 to get our second confirmation to actually take this trade. But in EU or NZD, even if we got our confirmations here, I didn't check, but even if these ATHs were also shift candles, we wouldn't want to take these trades. We're going to want to wait for price to move into this area because I'm more than certain the price would more than likely shoot up into this area and get to that midpoint now. Okay. So let's look at the next pair here because we're taking a lot of time here. This is USDCAD. This is a butterfly. A butterfly, if you remember, is an extension pattern. What does that mean? That simply means that, let's get this in here. That simply means that this point D is higher than point X, right? It's higher than point X. So what does that mean? That means when we look for our order block, these are 1 hour scans. So we're going to go up to the 4 hour to look for our order block. Okay. Let's just pull this up here. Let's go to the 4 hour, right? Okay. And we could see here that we have this order block right here. Price though is already kind of moved through that order block. So I'm going to go up a little bit further here. So what you see here is this is interesting right here. So you see this banker candle area right here. But notice how this wick comes up. You get a break of structure here. So when you get this break of structure, that validates this area and this wick moved up. So this area is already liquidated. Okay. So I'm not concerned with these areas here. I'm going to go further up. And what I like is you see this banker candle here. Now you see these wicks coming up, but you didn't have a break of structure yet. So you don't get a break of structure till down here. And of course, those wicks come up to there. And then they also come up to here. And they also, are mitigating all through this area. Okay, so these areas here have already been liquidated. So we have to go further back. And what we see here is we see this area right here. This order block right here has not been touched yet. We'll double check that. And we also see a lot of imbalance here. Lots of imbalance that needs filled. That's IPA, improper price action, imbalance, whatever you want to call it. But we're going to use on the 4-hour chart here, we're going to use this area here. See something here real fast. I just can't seem to get this. This parallel channel tool is really annoying, but we like to use it because it gives you the midpoint of the block. I did it again. Anyway, let's move this down to here. And then we'll try to even this out here. Okay, so there we go right there. So there's our order block, right? If we scroll over here, and again, it's from wick to wick. This is the last up candle before this big move down, right? Big move down, break structure, right? Lots of orders, lots of money had to go into this, to this pair, right? Guys, it takes about $100,000. It takes 10,000 watts to move one of these pairs, one pip. Okay, that 10,000 watts is about $100,000 in money, selling money going into this pair, right? Okay, so if you're trying to move this pair, you could see, just from what we could see on the screen here, this pair moves like 500 pips. You do the math on that. I can't even do it in my head. So that's how much money has to go into this market to push this pair down. That has to be large institutions and banks. That can't be traders like you and I, okay? Unless we're George Soros, maybe, I don't know. But anyway, this is our order block right here. If we scroll over here, we see that this order block has not been hit yet. So we would want to put an alert right here so that way we would get an alert to our email. Now, like I said, I'm out of alerts, guys. So I can't put any more alerts on here because I've already marked up my charts in my other watch list for this week. But I want to show you how I do it here. So I don't have any more alerts. TradingView gives me 25 alerts. I can upgrade to a higher account, but I really have no reason to do that. You know, other than getting more alerts, I have enough alerts at 25 alerts to take care of my trading account, right? Or any funded account that I may manage in the future. And by the way, I am taking a funded challenge right now. The first 5 days, I'm up about close to 2%, I think. So I need to get it. I get 30 days to get to 10%. And then I'll make it to phase 2 where I have 30 days to just get 5%. And then I'll get my $25,000 funded trading account that I can trade with. And again, you can only risk 1% on those accounts, but you keep 80% of the profit with no risk. Okay. So if you want information on that, get with me. We have we have training on that in our group. Okay. You won't see many posts about that. The company don't like us actually posting about funded accounts and becoming a funded account trader. But I can message you, one-on-one and give you information on that. Of course, your first step is to learn the strategy. So you're going to want to become a member of our community right away so you can get access to everything and learn the strategy. So here's our order block for that. Let's add this to our outlook watch list so we can look at this during the week here as these trades come out. Okay, so let's go back now to the scanner. And our next pair is NZD CAD. We can see that this is a Gartley. That's a retracement pattern. You can see the X, the D has not come back to the X line. It's just a retracement pattern. Okay, so that's what the Gartley is. So that means when we go to this pair in TradingView, we can use the 1 hour time frame to mark up our order block here, right? So we're going to pull up NZD CAD. We're going to add this to our watch list here. Okay, so again, this is a buy. So we're going to mark up our order block here on the 1 hour chart. Let me just remove this drawing here. I'm going to drop down to the 1 hour. Let's, of course, make this bigger here, pull this up. We're going to scroll over here. And we're going to find this 1 hour order block down here. Okay, so let's just make this area bigger. Okay, so right here, we get this moved down to here. So right down in here, we have this banker candle right here. And we also have this one right next to it. So I like to make the order blocks bigger when I can. So if the candles are basically in the same place, they're in this consolidation here before we get this huge price increase, right? So this is where the large institutions and the banks were getting their orders ready. Of course, they can't just put in one order for 100,000 watts, right? They have to have the liquidity to place their orders, and they have to break them up, obviously, in the smaller amounts. So this is where they did that, and then price got pushed up. Okay, so we know price has to come back to this area. This is a logical area we expect price to come back to, because they have to mitigate these areas. They have to get out of their orders here at break even. After they made their money on this move, right, whatever liquidity they were taking, they now have to come back to this area just to get out of whatever trades they have there at break even, right? They don't have to do that right away, but eventually they have to. We know that, right? Plus they created some imbalance here. You can see this imbalance from this body of this candle to this wick. We have some imbalance from here to here, not much there. Some of this imbalance here already got filled, but we know price has to come back to this area. So we're going to mark up this candle right here. Okay, so we're going to use that for our order block. Okay, we're going to go over here. We're going to see that price has a way to go to get down there, right? So we would put an alert right here on the entry of this parallel channel. And then, that would tell us, once we get that email, that would tell us to come to the chart and see if we have a confirmation to take this trade. And that's what I go over during the week in my group, the Forex Smart Money Trading Academy group. So that's why I said right now I'm on my timeline. So you have to be a member of that group to actually see my live sessions during the week as the alerts get hit. Okay, so make sure you belong to that group. Send me a message and get in. So this is our 1 hour order block area for NZD-CAD. Okay, now do we have a closer area? You might be asking. Let's see here. And no, we don't really have a closer area. Okay, because if you look here at this area right here, this is just price moving up. So this is our closest area on the 1 hour chart. Okay. Now, if we look at the scanner here, you see that Manny doesn't have any areas marked up on this chart yet. So on Tuesday, when he does his live session at 8 a.m. Eastern time, he'll come in here and mark up an area. More than likely, it'll be this same area that I marked up down here on the 1 hour chart, right? This is our liquidity block, our order block. It's a banker candle, right? We use our banker candle from wick to wick to identify it, right? It's our banker candle, we could call it, our order block, our liquidity block. We could call it a area of interest, right? Whatever you want to call it. It's a logical area based on price here that we expect price to come back to and move back up, right? So that's how we mark that one. Let's get to here. We got a couple more pairs that I want to get through. EURJPY, again, we're on the 1 hour harmonic scans. You have to be a customer of our community, right? In order to get access to this harmonic scanner and get access to all these indicators on it, along with the ship candle. Okay. Now, you become a customer of IM Academy. That's how you join our community. That gives you access to everything we have in our community, our ATH indicator, right? That we use as a second confirmation to take these trades. It's actually the first confirmation. Then we use the shift candle and all these indicators here to confirm it, right? We like to have that on the same candle or it can be one candle before, one candle after. Okay. But the point is you need to join our community so you get access to all of this. So if you need the link to do that, let me know. You can try everything out for 7 days. If you don't like it, you can cancel, get your money back. If you're like me, you're going to love what you see. You're going to plant your flag here and you're going to trade Forex for years to come. And you're going to grow your accounts by 6 to 10% or more every week. Every week, guys. Not every year, every week. And if you have a funded account, you'll learn how to grow that at least 10% per month, which will be plenty of money, because if you have a $500,000 funded account and you make 10% a month, that's $50,000. You keep 80% or you keep $40,000, right? Now, if you just have a $50,000 account, that's $5,000. You keep $8,000 a month. I'm sure most of you will take that, right? That's $96,000 a year just from doing a little trading, spending a couple hours a day here and there, right? So make sure you join our community, become a member of our community, a customer of our community. You join I Am Academy under me, right? And that makes you a customer of the community. You'll get access to everything we have, plus access to everything I Am Academy has. Try it out for 7 days. You don't like it, cancel, get your money back as long as you're within that 7-day window. If you don't want to do that yet, you want to see what we're doing, you can get a free week of training with us. You won't have access to this harmonic scanner, but you'll see how we use it for a full week, and then you can make your decision. So if you need a free week of training and you're watching this, get with me and I'll give you the links to register for that starting tomorrow, Monday. Otherwise, let's move on here to EURJPY. Right, so we're going to pull this one up. And since this is a Gartley pattern, we're going to stay on the 1 hour chart, right? This was a sell, right? Yeah. So this was a Gartley pattern. It's a sell, right? So we're going to go higher up here on the 1 hour chart to find our area of interest. Let's see where price is at here. So let's see here. We do have a 1 hour area right here because we do have a break of structure, right? So this actually is a 1 hour area right here. And it looks like price is already in that area. So this would be the banker candle, okay? So we do have a break of structure here. But one thing we don't have is we don't have a lot of imbalance in here. The price is already in the area. So we have some equal highs here. This is some buy side liquidity right here. You have this high here, this high here. So we do have some equal highs. Well, this says actually a high. So we have a high here and a high here and a high here. So we don't really have equal highs. So we don't really have much buy side liquidity. Let's see here. If I go up, so if I go up, I actually have this area marked up here on an old chart. Let's just remove that drawing here. So if we don't use that area, then we would have to use this banker candle right here from wick to wick on the 1 hour. We got tons of imbalance here. Look at this. So you can see all this imbalance right here. This is all improper price action. This was all selling on this candle. The brokers can't, they have to balance their books. So they have to get back to this area eventually. Now you've seen they've come back about halfway, right? But they still have all this here. So we're going to use this area because we know the price is going to come back to this area. It has to. So this is a smaller candle right here. So when that happens, guys, sometimes what I'll do is I'll take the wick here, but I'll use the next candle next to it if it's also an up candle. So this just kind of makes my area here a little bit bigger because that candle's kind of small. Okay. So when we come over here, we see price has not hit this area yet. We have all this imbalance here, right? That has to be filled. So We wouldn't want to put our order block right here. That's just not a good area because we know that they have to come up here and fill this. They have to fill out all this imbalance here. So that's kind of what goes into your decision when you have a couple different order blocks, a couple different areas you can look at. This is a much better area because of all this imbalance here. We can see all, oh, shit, movement. You can see that all this imbalance right here has to be filled. Look at all that imbalance. Okay, so it's not quite that much because some of it has been filled, right? We can move that up probably to about there, right? Right, so you can see that all this imbalance here needs to be filled. So that's why this is a better 1 hour area to mark up than this is, okay? Because we could try to look for a signal in here, a confirmation to sell this, and price may actually move down before it moves up. But to me, this is the more logical area to pick, okay? So that's the area we're going to pick here in NZD CAD. Okay, so let's get to another pair here, AUD CAD. This is a bat pattern. Okay, that means this is a retracement pattern. You can see the X to the A is the trend. It retraces, but it doesn't come all the way back to the X yet. So it's not past the X, so it's not an extension pattern. It's a bat pattern. Bats will always be retracement patterns. Okay, so that means when we pull up AUD CAD here on the chart, that we can go to the 1 hour, we can stay on the 1 hour chart to mark up our area of interest. And of course, this is a sell, this is a buy signal, it's a buy opportunity. So we're going to want to find a 1 hour area down here. And so let's see what we have. So we kind of have this 1 hour area right here. Here's kind of like our banker candle, our last down candle before this up move. We get break of structure here. This area here has already been mitigated. So let's see if we pick, let's see what happens here if we pick this area. Let me just see real fast. If I grab my channel tool. Let's move this down there. Up. Let's scroll over. So we see price hasn't yet hit that area. So that's good. That's a good area for us to mark up. It hasn't been mitigated yet. Again, we would put an alert there, but we're out of alerts right now. So we can't put any more alerts on the charts because I put them all in my watch list already when I already did this. So actually, I've already done this process here. If you see here, let me just show you I have a SmartMonics watch list right here, and I've already gone through and marked up all the pairs. I've marked up the areas in all of these pairs that came out, right, in the scan. I went all the way down to CAD, JPY. So I have all those areas marked up. I cleaned up all the charts from last week, and those are the only areas now that are marked up. Okay, let's do one more pair here. GBP NZD, this is a shark also. Now this was from 4 days ago, so it's back here quite a while. And so this was actually, this, as you could see here, price actually now moved in our favor, right? Right, Nanny marked up this order block right here. This was an extension pattern though, right? So what I'm going to do is I'm just going to see, I'm going to go into this here real fast. This is probably going to be the last one that we do here because we're taking a lot of time here off of you here. So you see here, we're going to go up to the 4 hour and we're going to scroll over here. We have this area right here. It looks interesting to us, right? There's some consolidation here, a big push down. It broke all this structure, you know, from over here. So we kind of have this banker candle right here. Now you see this wick comes up, but it hasn't broken the structure. It kind of breaks the structure, right? And then it comes back up. So to me, I think they've already gotten the liquidity from this area. So I'm going to go up to this next area right here. Okay. I'm going to take this area here, right? Right. I'm on the 4 hour because this was an extension pattern. And when we scroll over here, we see the price hasn't hit this area yet. So we would put an alert right here. This is a good area. This is a good order block area on the 4 hour chart for us to look at. Just so you're curious why we use the 4 hour instead of the 1 hour, like I said, this is an extension pattern. So that's why I use the 4 hour. Okay. When they're retracement patterns, I just stay on the 1 hour because that's the hour, the time frame that the scan comes out on. But just to kind of give you an idea, let's look at the 1 hour chart here. And you can see here, if you go to the 1 hour chart, this area here is kind of still the same, right? You have this 1 hour banker candle that's inside of our 4 hour block. So that's a good thing, right? But the 4 hour just gives me a little bit bigger area in this case. So I like to use the 4 hour when I can. But when the scans that come out on the 1 hour, right? When these scans are just retracement patterns like the Gartley or the bat or some of the sharks, right? Then I kind of have to stay on the 1 hour. So my order block zone or my liquidity block may be smaller, okay? But I generally like the 4 hour, okay? Because you'll see the 1 hour is inside of the 4 hour most of the time anyway. And the 4 hour just gives you a bigger area, usually. So when we do get the extension patterns, which are the butterfly, the crab, and half of the sharks, right? When we get those, then I can go up to the 4 hour to mark up my order block area. And that's what I do. Okay. So this is what we have here for you guys, right? We just make, so we have these 5 pairs that we marked up today. You know what? Let's just do one more. We have GBP CAD here. This is a butterfly. So we know it's an extension pattern. We don't have to actually look at it. When we get to sharks, we have to actually look at them to see if they're retracements or extensions. We know this is an extension. We also know that it's a sell, right? So we're going to pull this up here. Right. So let's pull this down here, right? Okay, let's go to, we have something marked up down here. We're going to get rid of this. We're going to move up to the 4 hour, right? Okay, we see this area here doesn't have a break of structure, so that's not a valid order block area, right? We would need this structure to be broken, probably down here, before this area would be valid. But here we do have a 4 hour area that's valid. We get a break of structure, right? We have this area which has already been liquidated, right? Or mitigated. But right here, we have this area right here, and we do have a little bit of, no, we don't have any imbalance because see how that wick comes up and fills it, okay? Now, let's look at this a little more closely. We get a break of structure, but on the same candle, the wick goes up. So we don't know if that wick went up there before or after this break of structure. So we can't assume that this area has already been liquidated or mitigated. So we're going to use it, okay? But if this would have been the next candle that obviously broke this structure here and then came all the way back up, then that area would have already been liquidated or mitigated. So we wouldn't want to use it. But in this case, we're going to use it. We're going to mark up that liquidity block right there. Again, And we're going to use that. We're going to pull that second candle into the mix here. See? So we're going to go from the wick of this candle, which is the actual banker candle, down to the wick of this candle right next to it. Okay. And we know that this area has not been mitigated yet. So this is a good area for price to come back to and then react downward. Of course, we got to drop down to the 15-minute first to get our confirmations. What's our confirmations? They're the ATH and they're the shift candle, the ATH on TradingView here. That's these red diamonds and blue diamonds, right? That's our proprietary indicator, right? And then we go to the harmonic scanner on the 15-minute to look for the shift candle, right? And we also want to make sure that all these indicators line up on that shift candle, right? It's also good if the shift candle breaks structure or it's a candlestick pattern that in this case would be bearish, right? So the bearish ones would be the three-way strike bearish, the bearish engulfing, and the evening star. Okay. So it's also good if it's one of them, but it doesn't actually have to be. The reason why is because we're also using the ATH. Now, if you're in IM Academy, but you're not a customer of our community, then you don't have access to this ATH. So that sucks for you if you're watching this. So you have to use those candlestick patterns to determine if that is a good, valid shift candle. So you would want all those indicators to line up. Plus, you would like to see either a bearish candlestick pattern that I just told you about, or a nice break of structure from a consolidation in that area. Okay, so that's kind of what we look for. We also, if we don't get those confirmations candles, we can also look for a lower time frame flip. You'll learn about that later. That's a little bit more advanced, right? So we also look for a lower time frame flip in our area of interest. Okay. So that's going to be the weekly outlook for this week, guys. Okay. We went over let's see here. We have 6 pairs that we went over. We marked up the liquidity block either on the 1 hour or the 4 hour chart, right? And if you're watching this video and you need to know what these areas are, just send me a message. That way I know that you are watching the video. I don't want to go through the whole process right now if people just aren't watching this video. So if you want to know what these actual areas are, send me a message and I'll make you a quick video showing you what these actual areas are. Because they don't show up when you do a channel. The problem is it doesn't show the areas over here. Like if you use this rectangle tool here, the good thing about that is it kind of gives you the areas here when you line it up. Well, actually, it doesn't give you the areas. I'm sorry. So you would actually have to get rid of that. In order to get the areas there, you actually have to go ahead and put an actual line on each of those like that. And then they show up, they show you the range here from 1.64260 up to 1.64645. See? So if you're watching this video and you can't determine what these ranges are and you want to know what they are, just send me a message here and I will make a video showing you what those ranges are. Right? But we have these order blocks marked up. That's our weekly outlook. Now I have a few more of these scans. Like I said, I went all the way down. We just did these first 6 or 7. I went all the way down here. There must have been one that I didn't put in there. Let me see something here real fast. EJAC. So this one here, I forgot to put into our watch list here, our Outlook watch list. So we have these 7 pairs that we went over today, right? We went over 7 pairs and we marked up either the 1 hour or the 4 hour area of interest. Okay, now on my watch list, I went through 3 additional pairs. So I have about 10 pairs marked up on my watch list, and I have alerts set on those pairs, or I have them marked as already being in the area to look for trades on Sunday night, tonight, 5 p.m. Eastern time, for those pairs. So once those alerts come out, I get an email, and then I go live during the week, a couple times a week, and I go over these alerts for you in a live session in my group. So make sure you're a member of my group, Forex Smart Money Trading Academy. Drop a message down below. I'll send you a link to join that group if you're not a member yet. If you need a free week of training with our community, you won't get access to the harmonic scanner or the shift candle and all the indicators on here that you see, but you will get to see our community live training Monday through Friday, 12 p.m. Eastern time. It's all recorded if you don't make the live sessions, and you'll see us using this. Okay. Then you can decide to join our community by becoming a customer of IM Academy. You'll get access to everything there. Try it out 7 days free of charge. Not free of charge. Sorry, you have to pay for it. But if you don't like what you see, you can cancel within that 7-day window and get your money back. So any questions at all, guys, message me down below. If you're watching this video, let me know you watched it, because I don't want to just keep making these videos if nobody's watching, right? I can just post the trades in the group, and it seemed like more people actually get reached in the images that I post than in the live videos. So make sure that you're commenting or something if you're watching this video. And if you want to know what those actual areas are, send me a message and I'll make a video showing you those actual numbers, okay, for these areas that we have marked up. Okay, so Bill Soriano from Pittsburgh. Have a great week, guys. Make it a great week trading Forex.